Hey guys, welcome back to our monthly series looking at Bitcoin, cryptos, the stock markets, and the real estate cycle. This video is going to be a massive update. There's a lot of data to get through as per usual. I suggest rewatching this video multiple times and of course hitting that like and subscribe button so you can stay up to date with the series that we're putting together for the financial markets. Now, there's a lot to unpack here and a lot to get a grasp on because of where we currently sit in the cycle and more so in the feeling of the market. As annoying as that is to say, the feeling is quite down. So for me to get through the data today might seem a little strange because we're trying to forecast over the next 1 to 4-ish months and beyond that point as well. This is not just a day-to-day analysis of the market's up, the market's down. I hate that as much as you do potentially, and I want to forecast things a little further in advance to take action and make the most out of any significant moves that I personally think are coming up in the market. And at the end of the day, this is just an analysis video of what I think is coming up. So without further ado, you know the deal here. It's your home of macro cycle analysis with me, Jason Pizzino. I've been trading and investing for over 17 years now, starting in real estate and getting into Bitcoin in 2017. So I've been through a few cycles now, and some of these things seem to rhyme cycle after cycle, but it always does just enough to fool most of us most of the time, including myself. Today's agenda is quite detailed, so I suggest, as I said, coming back to this and maybe rewatching it throughout the month. I don't expect to get everything completely right, but so far the more macro views have been on track, and you guys can take a view of any of the videos that I put up here on the channel almost daily and basically recap a lot of that information. Today, we're going to cover 9 of the points here: current thesis, real estate, Q3 into Q4, so there's a summertime lull, some of the economic data and what's going on at the moment. 5, we've got some global indices to look at, and basically I've given it away there, the bull market that continues on. What this means, there's a big one there with the correlation. I know people hate that word, but the correlation between the macro bull markets and the stock markets and in Bitcoin. Some stuff that I covered 6 months ago, and it might be very helpful now when the feeling is quite dim and depressing in Bitcoin and cryptos. Speaking of which, here's your market sentiment, looking at the trends. 7, Bitcoin, our big March signal that we've talked about for a long time now, and it's continued to work and also worked for the S&P 500. And then onto the September analysis, altcoins, and some of the major price areas, the macro stuff, in case there is a significant breakdown. So let's just start with the current thesis. Has anything changed? Not particularly, just in a very simple answer here. My current thesis has been around this March signal for Bitcoin. If I can bring up the right chart here. We had the 3 days down at the top of the market, and looking at the previous data when these signals had occurred at significant turning points, not just any turning point in the market, looking at very significant turning points, 4 to 6 months below the old all-time high. The 6-month window would take us out, if we want to get exact here, to around the 13th of September, so just after 9/11, and that is going to be quite significant as we review the previous months, the previous years in this same period. You get a pretty similar feeling around this time, but maybe a similar-ish pattern. Okay, I'll get into more of the objective data, but I think it's just good to cover what our thesis has been. And essentially, it hasn't changed. The macro bull is still in play, and the as we'll see, the rest of the macro cycles or the traditional markets, which hold the majority of the money, are still playing ball to our real estate cycle. So speaking of which, the real estate data, winner's curse phase. This is where we're at. This is the run-up that we're currently in, especially for the stock markets and for real estate prices. This is now the data. It's not my subjective opinion. This is what's going on mostly around the world and mostly in Western developed countries. Here is your core logic, case Shiller US national home price. Now this is just one data point. I've gone through many of them on the channel, but these videos typically end up being 40 minutes and I want to try and avoid that today. We're looking at the most recent data from May into June. It was up 323 into 325, and it's been up that whole time. Here is a pro tip, massive, massive pro tip. Looking at our 18-year cycle, if I can break this down as most simply as possible, roughly 14 years up for the real estate and economic cycle, not the stock market cycle, not Bitcoin cycle, then roughly 4 to 6-ish years down. Check this out on the Case-Shiller Home Price Index. Look at where the recessions occurred. Here is the end of a cycle, and you had house prices in a recession. They went down. Land values, real estate, property prices, whatever you want to call it around the globe, they went down. Then you had this higher low form, and the 14 years up continued or started again, and then you had your correction, the big correction here. Not this small correction in the middle, this mid-cycle slowdown. And then look what happened again after your roughly 14 years. House prices went into a recession. But look at the recession in the middle here with when the dot-com bubble happened. House prices did not go down. And then again, in the mid-cycle slowdown for this cycle, this current cycle we're in, house prices did not go down. And now we are into this final leg to the upside, which is why I still think there's further upside to go for Bitcoin. Cryptos, they're going to come and go. There's probably going to be some pretty big moves, but we'll get to that data in just a second. So as I've looked at here, with just a brief recap of the real estate cycle and the real estate data, things are still looking up, even though maybe your town in some random place around the world might not be doing so well. We're looking at the broader picture here, the national prices, and especially in Australia, you're definitely seeing things going up. You've got M2 money supply. This has also started to trickle up again. You've seen this come into the news headlines again. This is just looking at the raw data. More money is coming out into the market, maybe because people are saying, well, things aren't looking good. They have to start printing again. Maybe so. But as well, we're in an election year. And so every time you get that, well, they love to print more money and promise more and more money to hopefully get re-elected. And I'll leave it as broad as that for this video, because you guys know I do go into far more detail in other videos. Now, with this one here, this one was posted in February. So going back, where are my numbers? 7 months. Take a look at where we're up to now. Okay, so let's have a look at the summertime lull and basically the trend of the market. Interesting stuff here. February, we're now in September. Look at it, says you are here. And we're looking at a composite cycle, a cycle composite for 2024, encapsulating all of these. Now, if you can't read them, it's essentially they're placing equal weight on 1 year seasonal cycles. So every year, this is going back to 1928. A lot of data there. 96 years. You've got your 4-year presidential cycle and then your 10-year decennial cycle, one that I really, really focus on because you're looking at the 4th year of each decade. And so you had this correction here roughly around May. This is just looking at the overall trend, putting together a whole lot of data for 96, 95 years, okay? Then you had another correction here late July into, probably late July. And now this big boom out in August. Next, roughly sometime around this period, September, October, bit of a correction here, maybe a quick, swift dump as well. And then boom time happens later in Q4. Just looking at the overall cycle here. Is that similar to what we have currently seen for the S&P 500? I would argue that yes, it's kind of similar. It might not be in the exact month. May had the correction, whereas we had the correction in April. Then we also had that correction from July into August. And then August has basically bounced out of that zone. So you're not trying to get this thing exactly the same. It's basically just a rough roadmap. And looking at 2024, it's going to close positive. That's what this overall cycle composite is telling you, an overall uptrend throughout the year. And you're going to get some pretty significant corrections. And it seems like we've had a couple of those already. And it's almost to the exact timing. I don't want to say exact, but it's almost to that same timing. Now, note this. This is the feeling that happens at the exact time. Just like we had at very similar lows and very similar tops. I just found this super interesting. Get the F out of here. You're saying we're going to go to 55 to 6,000 points on the S&P 500. This was written in February. And, well, what happened to the S&P 500? It went to 5,600. It got within that zone, 55 to 6,000. At the time, No one can believe that this is going to happen. That's what I love so much about recapping what's happened on X, or what people are talking about. And you can see it on X because you can see dates, and trying to do forecasts are very difficult, super difficult. But when you just put a few things into perspective, a lot of people did not believe that at the time. And that was what was going on at that time. So I think we might be in something similar now, because a lot of people don't think we're going to come out of this depression, I guess, for Bitcoin, which is mostly why a lot of people are here. But we're starting to see some of those signs flow through into real estate. Well, they're there in real estate, but flow through into stock markets, hitting new all-time highs. And again, the majority don't believe that this is possible for the rest of the market. And in my opinion, my thesis, as I've said here, and I'll continue to add those bits in here, is if I think there's more money coming into the system being the financial markets, real estate, and the stock markets, I expect and suspect that more of that money is going to flow out into Bitcoin and cryptos as people chase more gains in riskier assets. That's my opinion, and that's my thesis that I continue to carry through all of my trading. So I had a look at the M2 come through. This one I found really, really interesting, so I'll keep looking at that. As I said, with this next point, so that's around your summertime lulls, the trend sort of dying off, but then eventually coming back through this quarter 4 or late quarter 3, and that's what we've been through now, into ending this quarter 3. That brings us on to economic data, expectations, interest rates, money supply. We looked at money supply. When I say expectations, there is a massive expectation that interest rates will be cut. It's almost like people don't believe there's another option. And that's what happened in January. We talked about it here on the channel. Again, you can go back and check any of those videos from 9 months ago now, where we're looking at interest rates not getting cut. And so far, they haven't been cut. And now we're finding ourselves at this exact expectation that they must be cut. And maybe it happens this time. But I just want to remind ourselves that it doesn't matter if interest rates are cut. It might not be the thing that collapses the market. And now we're in this mindset that with interest rates getting cut, that's the sign that the stock market has to go up. Whereas before, the theory was if interest rates are cut, then the stock market must crash. So overall, I don't think it really matters about this. It is an expectation now that the interest rates will get cut this year, and the Fed's told us they're going to do it next month. We'll just wait and see. I don't think it has a major effect on the market at this stage of the cycle because of everything else that we are seeing. And of course, I'll get into that in even more detail with other videos, but this is just a recap of a high-level look at those data points. Speaking of which, the next piece is looking at the economic outlook here. So from Phenom Group, Seth, as it pertains to the macroeconomic outlook, not much has changed. Yes, people will think it's changed a lot, but really it hasn't. The economy continues to ebb and flow, expanding at 2+% GDP in quarter 3. So the GDP has continued to go up. There's a lot of reasons why people think it shouldn't or it will change and all that sort of stuff, but I'm just looking at what has happened as well. So let's have a look at this on the side here. There remains pockets of economic strength and softening, but the consumer remains in a healthy place as household balance sheets remain robustly supported by higher than average wage growth at 4% annualized. We've always said that as long as the chart of household debt service payments as a percentage of disposable income remains in good shape, that's a lot of words there, and the best levels in history, it's more than likely any degree of economic softening will simply prove temporary. And we've been saying this since 2017. Naturally, the chart does not offset a once-in-a-lifetime pandemic, which is otherwise unforeseeable. So what this is looking at is the household debt service payments as a percentage of disposable income. It's at its lowest levels, which isn't a bad thing in our current state. So it's lowest levels. Markets have continued to go up. Seth has been on this thing for years now saying the same thing, and the stock markets have continued to go up. Asset prices have continued to go up, and I suspect you're here to trade asset prices, invest in them long term to make money from the upside potential. You're not here to try and debate household debt to say that, well, the market must collapse from this point or so on and so forth. Maybe you are, I don't know, but I suspect that you want to just look at the data and see what's actually going on as opposed to what the headlines are telling us why one thing should collapse and then using the exact same data or the exact same headline to tell us the opposite. I see that all the time, and so far things are in a pretty rosy state. So we've ticked off 1, 2, 3, 4. Let's have a look at these stock markets before we get into Bitcoin and cryptos. and I attempt to make this video under 30 minutes. Let's start with the bottom one here, Dow Jones. That is August. That is a new monthly all-time high close. And something I've heard recently is, well, a market collapses from an all-time high. That is true. But how many all-time highs are there before the collapse? And if you wanted to do the numbers, you can go back to December 2023. That has now been 10 months. And you want to look at the dailies in there? Well, there's plenty of daily closes that are at new all-time highs in that period. So yeah, eventually the market will collapse from a new all-time high, like it did in 2022, going down 25%, like it did at the pandemic, like it did in 2018, like it did in 2007. But in the meantime, you've got hundreds and hundreds of days at new all-time high closes. And raging bull markets, which was my quote, was saying that raging bull markets start from a breakout of a previous old all-time high. There's 2007, you had the breakout in 2013. You don't want to be shorting it from that point. You can see the clear evidence now that that is a ridiculous thing to do. Then you have the breakout of 2020. Again, another massive breakout there. We've had a breakout of the 2022 top in late 2023, early 2024. Again, not a place to be shorting. More times than not, you just don't want to be shorting when markets break into new all-time highs. So here we are. This is the Dow Jones. That was my rant there, looking at each of these these countries. We've got the Dow Jones. Quick look at Australia. Just a couple of ticks off a new all-time high monthly close. After, mind you, August was that Japanese carry trade yen scare. The rest of the world had this big volatile correction and it bounced off pretty significant support levels. Canada didn't even care about this event by the end of the month. A new all-time high monthly close with a new all-time high price as well. UK, new all-time high monthly close. Germany, new all-time high price and new all-time high monthly close. What else did I put in there? India, new all-time high monthly close. And I think Brazil was also up there. New all-time high monthly close. Why should we care about the rest of these countries? Well, they're all doing trade with each other and they are all very big economies around the world. US, of course, is the biggest and China being second, not doing as well, but the rest of them are all doing extremely well. And when you break out to new all-time highs, it's not something that I think is a great idea to short just based on history. So massive, massive moves in global markets through August when the media was telling us another recession was confirmed, like they said in 2023, like they said in 2022. You guys should know the deal by now. Okay, so that leads us to number 6, market sentiments and trends. Well, I'll keep this one brief because I think we're going to go a little over time here. The sentiment remains cautiously bullish, and here is your actual data. The greed at 63, the timeline shows a creeping to the greed after being in the neutral territory for quite some time. And I think with any of these sort of corrections, well, you just get this drop back into fear or into a neutral zone, and that resets the market sentiment, meaning that you squash the greed out of the market. That's really been happening for Bitcoin lately with this drop down into fear and hanging around in the fear for quite some time. So I'll come back to that in a little bit as well, but that's basically the high level look at just market sentiment and trends, looking at the data there and then what's happened over time. But I've got some way more interesting stuff to look at here. And this is a look at the S&P 500 at election time with the Bitcoin cycle. Now, I might do a separate video on this in more detail, but to keep this nice and high level, we're looking at this red arrow, which is the month that the election is held in. And then we're looking at where the market has broken out into a new all-time high, and then how many months it has taken for it to break out again. So let's have a look at the first one. And this is the previous all-time high. So the first one is actually just a fresh high in this major bull market in 2012 because S&P broke out in 2013. And essentially what we're looking at here is when this has occurred, this is the month that we're in here, September. 2 months out, we got the election. Once that occurs, then you've got this pretty significant move for BTC and the stock market. So that's 2012. It didn't happen in 2008. And I'll just leave it here that 2008 was the end of a cycle. That was a correction, major, major correction, a recession in land prices. That's why it wasn't happening then. So S&P, big breakout here. You can see even 2004, you had the election here in November, and then the market continued on from that point. We'll go again, 2016, there was the July period into that correction into the election, November, the breakout into new all-time high prices. That's 2016. Bam, market went up. Bitcoin followed suit. It had already been trending up higher. And then also 2020, you had the breakout into new all-time high prices for the S&P correction and a pretty significant bull run into that final peak there when Bitcoin and the real estate market also followed suit. Significant correction for both for stock market, Bitcoin, and real estate also did that. And now we're on our way again. At least that's my opinion of how I'm seeing the data here. It looks like we've got this coming up. And when this is layered over the top of this one here, maybe you've got September through to October. There might be a little bit more volatility and some difficult times over the next couple of months that lead into that election before the uncertainty clears and the markets do what they've done over the last 12, 13 years. So we're getting through the Bitcoin analysis. I've covered my March signal, looking at roughly 4 to 6 months under the all-time high, potentially even up to 7 months as we've looked at before. September analysis, yet again. This one here I brought up a couple of years ago, looking at how the Bitcoin price action correlates to the S&P 500. So again, at a high level here, a couple of all-time highs have occurred for the S&P 500, and like we just saw in the case of 2012, before the old all-time high was broken, you had 2 fresh highs in this Bitcoin accumulation stage, which is what I'm labeling it here. Now, I'm only labeling the Bitcoin bull from a point where it breaks out to a new all-time high. However, this time has been slightly different, but for the sake of the accumulation and how the Bitcoin price action is occurring now, I'm still going to keep this as the accumulation phase. You'll see why in just a moment. So here is the first all-time high. You got a bit of a correction, some sideways market, another push higher, but the pandemic occurred, and I wanted to use this one here as the breakout in Q3, Q4 of 2020 before that big bull market occurred for both the S&P and Bitcoin. So that was 2020, looks pretty good. 2015, 2016, again, breakouts for the S&P to a new all-time high, correction, another breakout, correction, and then Bitcoin bull market went nuts. This little period here in 2017. So that's the breakout into that fresh prices. Same deal again. Don't need to repeat myself. I think you get the idea. Here's the bull market, new all-time high prices BTC, and a couple of fresh breakouts for the S&P after following some corrections there. Now, we've had the S&P breakout, correct, and Bitcoin also hit a price point where it wanted to pause and consolidate the very, very strong move that it went on from August, September of the previous year. I think this is starting to repeat again, and if we see this breakout for the S&P 500 to new fresh high prices, which is what I talked about earlier in the video where I looked at the rest of the world breaking out into new all-time high prices, I think it's just a matter of time until this happens to the S&P 500. And most of you will probably say, well, that's obvious now as it sits at within 1% of a new all-time high price. But don't forget, back here on the 5th of August, it was looking like this was over. I had so many people saying, it's wrong, it's over. The market's about to collapse from this point. And now it sits at less than 1% from a new all-time high price. So to me, this is just a matter of money flowing into the system, and it's basically a matter of time until it finds its way from these systems into that system, into our orange system of BTC. I'd also left this on the chart from way back when, looking at Q4 party time. I was hoping it would be late Q3. I don't know if we're going to get that in September, but nonetheless, I still think that there's still some good times on for Q4 for the S&P and for Bitcoin as well. Speaking of Bitcoin, let's have a look at some of these monthly returns. Now, I'm going to get back to some of the seasonalities over the previous years as well. Last year, some of you might recall, I didn't think September would be a red month last year because there was 6 in a row red. So 6 years in a row that were red for September. And I just couldn't see it making it 7 in a row from where the price action was. So I'll leave it at that. And then I think everyone's covered this to death, meaning September's usually a red month, and here are your averages. You've got more red months than any other month in the year. So therefore, well, it seems like September might be a red month. We always look at the data. That's what it's suggesting, but I don't know if it's going to be anything too severe because of where we find ourselves in the macro picture, as I've talked about now for the last 20, 25 minutes. So that leads us to the short-term outlook just for BTC now. Before I get into the longer-term stuff, I posted this on Friday, 30th of August, and look towards these levels. Dotted line here at 53, then your mid-50s to high 50s here at 57. So basically 55 to 57K as a good area for some sort of test for the price action to see what happens. Does it test and break down, or do we test and bounce out of this zone? So what have we seen since that post, the last 3 days? Well, it's come back and tested it at $57,000. Why do I have those levels? Well, they're major 50% levels on the chart. You've got the 2024 range here, slicing through the middle here, and also testing that May low and that current drop there in August, and that's at 56-ish K. Then you've got the 53K level, and then of course the low here at $49,000. The fear and greed, if you want to get access to this to throw it onto your chart, this is exactly a copy of this here, but you can see it on the chart, so you can watch it underneath each of the daily actions. Just use the link in the top of the video description here. You've got a 7-day free trial to add the swing indicators and this one here, the crypto fear and greed index, to your chart. So this is something specifically that we've put together, and to get access to it there, if you want to test it out, absolutely free, 7 days, link is in the video description. Now you can change this and tailor it to a few different things here, change the color to white, and I like just to take off the data points so there's not too much info there. And what I've done in previous videos is just look at each of these times that Bitcoin has come back to test the extreme fear and fear zone during bull markets. And from those points, they've basically been market sentiment resets, and the price is eventually pushed out from there. So let's have a look at September's now for BTC. And going back to last year, this was a pretty dire situation for the market. That was the lowest sentiment for an extended period of time since the FTX collapse. Yes, you had the banking crisis, but it barely stayed in fear for very long. So that's why I'm calling this August, September, October period one of the longest fearful periods for Bitcoin in that entire bull market to that point. So now we find ourselves in a similar pattern. You've got August, September, which we're currently in, and this has been the longest fearful time since that time 12 months ago. So the patterns repeat, not exactly, but they do rhyme. That's at least my view. And I think we're in this rhyming stage of a market sentiment reset. And with these moves that happened on the 11th of September, that was that low date, that one freaked the market out there. You can see it right there. A lot of people thought that that was about to collapse from that point. And I even thought we were going to see a collapse from that point. The following day happened and it held in there. My calls of never going to see 25K Bitcoin again were almost proved 100% accurate, but you can forgive me for $75 underneath $25,000, and then the market took off from that point. So it didn't happen in September, but it did happen in late October. But you could start to see the higher lows form here. And so if we start to get something similar here, if there is a higher low forming in price for BTC, that could be a fantastic entry opportunity should the price not go further and invalidate the lows. And that takes me to the first one here, invalidation levels for the September action plan. So if Bitcoin is to break down from 44.6 and around this low here, this ETF low at 38, well, that would invalidate all of this. And essentially, you've got the stock market and real estate going up, but for whatever reason, people are not seeing any value in Bitcoin and cryptocurrencies. And you've got the breakdown of macro bull market support levels. That, for me, comes in at 44.6, and then this ETF low is around 38.5. So you'd want to see weekly and monthly closes under that level to invalidate the analysis that I'm going through with you guys today. But we're at 57K. We don't need to worry about that for now because, well, we're not at that price point at this stage. You would have to see breakdowns at 53, 50, 49, and then, of course, get into that zone. So I'll leave that. That's just a recap of the invalidation levels because I think it's always important to be prepared should anything correct. In terms of September and the price pattern itself, you can see that it wasn't just a straight move to the upside, and there was still a lot of uncertainty through that month as it climbed into October. Again, more uncertainty before the market took off. That was 2023. 2022, which was basically coming to the end of the bear market, again, not a straightforward month. Downside, upside, downside, and then basically went dead. And October went very dead until November happened, and then that basically brought things back to life for a few days, and it went dead. So this one's at the end of a bear market. I don't think we're at the end of a bear market at this stage. Maybe you do, but we'll wait and see. Okay, so September, again, wasn't a clear pattern. But 2021, so 3 years ago, there was some pretty significant news in and around September. This was when Evergrande was talked about how it was going to collapse, and that brought in these particular dates here, the first week of September and the third week of September. So what I'm doing here is just looking at September and how it's been a critical time for significant lows to form in a market. And that to me is a very significant low. Evergrande lows, and then the market pumped to a new all-time high from that price. Then you got 2020. This was the final dead correction. This was the final time that people did not want to talk about Bitcoin. You can see it in the price chart. Look at how tiny those price bars are compared to what came next. No one was interested in it here, and then it broke out. So 2020, similar to 2023, maybe we see a similar thing here in 2024. You're starting to see the price bars reduce, like I've talked about before with the average true range. So that also dropping off. So some similarities are occurring here. And that leads me to some of the longer term stuff now for BTC. So we've covered off quite a few of these agenda items. I think it's time now we get to some of the price action for alts, ETH, and SOL, so we can get this around 30 minutes. Here is your BTC. Look at the election. So this is the red line here, and when it broke out into a new all-time high. So last cycle, just looking at election cycles now for BTC, and looking at where we currently are for September and trying to forecast or project out over when we might break out again. 2020 took 2 months. It broke out, it touched a new all-time high in November and then really broke out in December. So call it 2 to 3 months. Going back previous cycle, you had this is September here, a move to the upside, a breakout happened, or a test of that top in March. So basically 6 months, then you got the breakout happening in that 7th month. Previous cycle, roughly around 5 months. So where we are in the current position leading into the election, which is there on the red arrow, and then the breakout happened there. So roughly around 5 months. So we've got a range here between 2 or 3, I'll call it 3 months just to give it the benefit of the doubt, leading into that election and the breakout, up to around 6 or 7. So where does that leave us now? If we're projecting 2 to 3, up to around 6 to 7, you've got September, and 2 months will obviously be November. So maybe a test of the new all-time high by November or December there. So that's why I'm still looking at Q4 of 2024 as being a pretty significant time for Bitcoin price, as I suspect Q4 will end higher than what Q3 does, providing September ends roughly in this price range between your sort of 50 and 50 and 60, 65-ish thousand dollars. 6 to 7 months, however, takes us out to Q1 of 2025, and that's also been an area of interest when it comes to time targets for BTC. So overall, it's not looking too bad. We haven't broken down from any significant price levels for BTC, anything that would destroy the bull market, that is. And in terms of time, it seems like it's a matter of time until it does happen. And fortunately, we haven't seen too many severe crashes. The market has come down to 49 and then bounced back to these levels. I've talked about the price already, so I won't get into that too much further. Now, the final thing on our list here is to look at the total cryptocurrency market cap. That's altcoins and a bit of ETH and SOL. Now, to keep this thing as short as I possibly can, I'm going to focus on total market cap and then just have a quick recap of ETH and SOL, and I'll leave that for future videos this week and next week in September. So this is our total crypto market cap, and you'll also receive this if you sign up for the 7-day free trial, as this particular indicator is TIA based, where you can change your inputs here. So you can exclude stable coins, whereas the typical crypto total market cap doesn't exclude stablecoins. So you can do that, change these up, and change a few of the other settings. So we hit, well, this is where we've currently come from for altcoins, that is, right up to 650 billion, and now has corrected onto that 400 billion and starting to decline once again. So we did have this bounce from August, but it seems like many of these altcoins are starting to decline a little further and might also take out that August low. Now, I thought there would be a pretty significant move up, but I then thought there'd be a pretty significant correction. I've also talked about higher lows forming in April. Many of those have broken down, and now we find ourselves at some lower lows here for August, but other altcoins have managed, some altcoins have managed to hold up that April low. Now, it's very few of those altcoins that have actually held up from those lows, and I mean, that's just the game of trading and investing, but talking about any sort of corrections and finding some strength, if you're to find some altcoins that are holding up above their previous consolidation zones, especially when the timing comes in for a potential reversal here, as we've looked at with Bitcoin through the traditional markets and any sort of breakouts into new all-time highs, which might cause a turn in these markets here coming into Q4, that could be a good entry point for any sort of leg up in the altcoin market. So keep a watch out. I don't know how many are actually going to do it. There's obviously a lot of junk out there, and it's a bit more of a tricky game, and you could wait until the confirmation occurs, something that I often talk about, because at the end of the day, you just don't know which ones are going to make it and which ones are going to keep falling, taking out other significant lows. So for these price points, you're looking at anything above 260 billion for the total market cap, up to around 310. So tests in this zone are still fine, but you definitely want to see it start to close above 300 billion over the coming months. And again, this is the time frame that we're looking at here, Q4 to Q1. So Q4 2024 to Q1 2025 for a breakout and into new prices here. Basically, consolidations above 400 billion, 600 and 650, because that would take out this the top there, similar to what happened in the previous cycle. You had the tipping points in the market itself, a nice big run up to test all of the liquidity, some pullbacks, taking profits, and then the next and potentially final stage of the altcoin season to take place once you see significant breakouts of key resistance levels. And I think the market has now given us a key resistance level at $650 billion, excluding Bitcoin, ETH, and stablecoins, that is. If you include stablecoins, it's more than that. It's roughly around 750 to 800 billion. So that's the altcoin space over the coming months. I still think it's on track to do what it needs to do in Q4 and Q1, and will probably take off a little later than BTC. ETH on the monthly here just closed above the 50% level. It's hanging on for dear life, and the ETH BTC chart continues to hang on for dear life as well. It needs to see reversals above that sort of 3.5% level, and we've been saying this for months. Anytime soon, it's really just continued to grind lower and lower. Longer term, this might become one of those XRP type tokens. I'm just throwing it out there because it is really not doing much against its Bitcoin value. I'm not saying it because of the project's the same. It can still provide a lot of good value, but in terms of providing you financial value, that is a different story. That's what we need to separate here. And if ETH continues this path, and then eventually, don't get me wrong, if it does push higher and fail again at roughly 8 to 8.5%, or even lower, if it fails against that, it's not a good sign for ETH versus BTC longer term, and might not be a great investment token in the future until it can break out of those key resistance levels. So that's a worrying sign for ETH versus BTC to get those bigger gains. Solana might be on a similar path, but might produce a little higher results just based on the chart so far. This thing at 130 now, if it breaks 109, well, then you're looking back towards roughly around the 100 as a psychological level, and then back to these lows here. That was underneath the ETF and the Feb 2022 low. So that's roughly around $75 to $80. I'm not saying it's going to get there. Just hold your horses. I know people go straight to the comment section and say, you said this. Not at all. But if we're just looking at any sort of corrections, if it is going to be weaker and there is some slight weakness to go in the total crypto market cap, well, then it wouldn't be surprising if Sol was one of those cryptos that had to reset before it's able to find its strength again and break back past some of those higher prices. Similar sort of thing here for the Sol BTC. If that starts to break down and come back to test the 50% level, well, then you're probably going to see those prices get crushed quite quickly. Not saying it's over. I'm just saying have a look at some of those next support levels in the market. So that's a recap of the entire financial space for August and into September, and then Q4, basically finalizing 2024. From what I could tell, the market sentiment is pretty dire for Bitcoin and crypto, which isn't a bad thing considering what we have seen in previous cycles. Just looking back most recently to 2023, when it was pretty dire through August and September, only to take everyone by surprise and just basically take off in October. Similar sort of things have happened in the past going into the previous cycle of 2020. You got, again, corrections in September and then a takeoff in October, November. And we could basically go on and on through that. But I won't do that in this video. Thanks again for your time and support. Unfortunately, it was another 40-minute video, but I do appreciate you guys hanging around and lapping up the data with me. Like the video if you do enjoy it, and let me know in the comments section if you think we're delusional thinking Bitcoin's going to get to a new all-time high in 2024, or if you think it'll happen. Pinned comment down below, and don't forget the free 7-day trial for those indicators that I just mentioned in the video. Thanks again, guys. I'll see you at the next one. Until then, take care and peace out.